Hello, YouTube. Today we're going to be talking about this head and shoulders on QQQ and something that stocks are going to need. Otherwise, they will not be able to go higher. We have the same pattern on QQQ and on SPY. So we're going to go through some simple patterns today, including the daily chart, the weekly chart, and then also the monthly chart, because each of them tells us a little bit of a different story. So anyways, in case you missed it, today the market went down after NVIDIA. We note that we're up by about 0.12%. And this is why we want to think about whether or not there is a current trap being set, because a massive red flag for me today was when other mega caps like Apple, Meta, Amazon, Tesla all got dragged down. We want to give an update to that. What could happen if the S&P moves by more, plus or minus 1% for 1 week? That would cause $28.8 billion worth of forced selling. Well, that's kind of what it looks like on the chart here. If we look back to the last like roughly week and a half, maybe even 2 weeks, let's get it nice and close to make sure it's nice and easy to see. I'm going to flip it here to candle, so it's a little bit easier as well. Remove all the lines. And we just want to note the daily range now. So I'm just going to go back here to low to high. All right, well, here, that's 1%. All right, check. The next day, what do we have? 0.8. Next day, 1%. Then we have 1.1. Then we have 1%. Then we have 1. So you can see like every single one of the candles ever since about August 14th. I'm not going to do all the other ones. Massive bearish engulfing candle today. Massive reject off of that 50 MA as well. So it's not just been a couple of days. It's been many days. And that's 28 billion worth of selling. And this article was published on, let me just zoom out here. Let me just double check. What is the date? August 10th. It is currently August 24th, or it is 2 weeks later. That's a pretty big coincidence, isn't it? Okay, well, if we get bigger moves, which we started getting in here, right? Small moves, big moves. And then we go big down, dead cat bounce. That's really important. Let's make sure we're mindful of that. And there's a lot of headlines, but let's focus on what is simple, because on Monday, going into this week, we were told bruised stocks face week full of tests from NVIDIA to Powell. All right. Let's read the next headline. I'm trying to tell you a story to you. So if you appreciate that, please consider smashing the thumbs up or subscribing to the channel if you're enjoying it. Wall Street falls as NVIDIA boost fades. Caution sets in ahead of Powell's speech. Doesn't that kind of perfectly explain what's happening here on the heat map? It's a sell the news. But what's interesting to me is that S&P is actually down pretty dramatically. So is QQQ. Here's what's interesting. FXI was up today, and there was no good news. So if we now go back here to hollow candle, what do we know? Oh my goodness, FXI actually closed up. Yeah, it's been closing higher. So that's pretty notable to me, because right now the Nasdaq, which we've been talking about, this box here where when we hit the 50 MA, we just keep melting higher, hollow candles till we make a new high. Well, that's been fizzling here. Gap downs have been for buying, other than whatever day this was, Monday. And gap ups have been for selling, and gap downs have been for buying. Classic charting, what we would normally expect. This all kind of makes sense. It's positioning. So it's all up to Jerome now, right? Oh man, what's he going to say tomorrow? Well, I'm going to look into those eyes and see what he has to say. What do you got to say, Jerome? He's like, wait, I'm looking for my speech. All right, let's get the speech. And before we do that, let's just look and see what sentiment is going into here, because this is really interesting to me. Exactly at 50. So I tweeted out earlier today. If you want to follow me, again, there's a link in the description, but you can follow me here. At the same time, if you wouldn't mind, please considering smashing the thumbs up and subscribing to the channel. I would greatly appreciate that. We try to put out the best stock market content, and we thank you ahead of time for joining our community. Anyways, being exactly here at exactly 50, what this tells me is that positioning is kind of like in line, but these moves are getting pretty dramatic. This looks like positioning getting into, de-risking going into Jerome, where they're like, man, last year, man, he came out like as a big hawk. He came out big bear. I don't want to get stuck with my pants down again like I did last year, because that was the year of the bear. So here's a preview for what Jerome would have to say. Jackson Hole on deck, right? Doesn't that sound nice? Okay, cool. Here is someone who used to work at the Fed and what he's expecting to hear from Jerome. Complete contrast to last year. That would be, again, softening. That would be constructive for stocks. Emphasis that job isn't done yet. Okay, we've already heard that for a year. What else is new? Fed will imply it's close to done with tightening. Cool, that's bullish. But possibility of more hikes will remain open. All right, so if we think about positioning, we think about Jerome coming to the table, we think about, okay, well, what does that all mean? It means we follow the price action now. It's the same thing we just talked about, what we were expecting going into this week while NVIDIA mattered. Well, right, There you go. NVIDIA mattered. But if we think about the price action, we already know the bearish story. We already know the bullish story. Hopefully you've been following along to see that. If not, stay tuned till the end and we'll show you the video that'll link to that. But here's the interesting part. If we now go here to S&P on a daily chart, we're going to do the same thing again. We're going to go delete everything, make a line chart. Okay. So 1 cut, 2 cut, 3 cut. We're kind of bottoming out here on a closing basis. That's what it's doing. What it feels like if we buy the gap up today and hold from green all the way to red, we lose almost 2%. On QQQ, it's down by more than 2%. That really stings. That really hurts. But if we look here now, okay, so 1 cut, 2 cut, 3 cut. So let's look one more time. 1 cut, 2 cut, 3 cut. 1 cut, 2 cut, 3 cut. Bottoming out on the last cut. Bottoming out on the last cut. I'm not saying this has to happen. It's just for some reason, for the last 20 years, this is what the candles do. It's like the weather. If I tell you, hey, stocks are up tomorrow, right? Make sure you're looking for blue skies. Boop. Well, yeah. And this move today doesn't look all that terrible when we look at a line chart. We go back to candles, you're like, whoa, look at the range on the day there, Joe Justin. Right? Look at the range on the day, though, there, Justin. Oh, can't talk today. Anyways, if you appreciate the commentary, consider smashing a thumbs up. Come on, do it. I would really appreciate it. You can also subscribe if you're new here. We try to put out videos every single day, and I'll just leave it there. All right, trying to have a little bit of fun today because I know on red days it can be difficult to be a team player. So let's try to see if there's any more news, and we'll go back and finish this off. So that could mean us going up big time tomorrow. So if that means us going up big time tomorrow, what do I want to see? Well, we said we're going to follow the price action, which is why we focus on the daily chart during weekday videos. We're going to look at the weekly in a moment. We're up by 39 cents or 0.09% on the week right now. We're down in post-market too, which means we're basically flat on the week right now. And that's because we came down for a 5% bounce. And now we just want to see what happens next. We've been showing you the preview of what all that means. But I'll show it again to you here one more time, just because I want to make sure this really sinks in. And I want to make sure this really sinks in because there's a lot of data out there. There's a lot of noise, and we got to make sure we're able to decipher the noise, like GDP getting revised again higher to 5.9. Oh my goodness. That is red hot. We got all these crash signals. We got positioning from the bulls, right? Are they going to go net long from those CFTC shorts? That's interesting. Again, link in the description if you want to follow. Earnings have been crushing, but what else have you done for me lately? That's the part about, well, S&P is kind of going down on good news of NVIDIA, where there's limitless demand for NVIDIA. Over here in China, they're like, well, man, things couldn't look worse. Well, that's a failed breakdown on the weekly. That's a bullish pattern. I like that. I don't like that it's below the 50, but the daily chart doesn't look terrible to me. It's trying to go up, right? Trying. There's mean reversion potential. It could hit the 50. It stinks. Don't get me wrong. This chart looks terrible. I'm just noticing the distinction between this one going up on the weekly and in the last couple of days, or notably doing what I was expecting from QQQ. Instead, the Qs got really soft and getting over the 50 and then trying to hold it. That just looks like a liquidity grab, where they're grabbing all the liquidity or all of the orders. Looking here to the monthly chart, there's been no damage yet. So when we look at different time frames, we're going to get a different story. So let me just get through the rest of this here, and then we'll go back to it here. China numbers are pretty scary. The China numbers are pretty scary too, but I think there's already enough with the, hey, there's a trap, right? We already kind of know that. Let's look here. All right. And then a certain person gave his condolences to a plane that fell out of the sky. I will let you decide what that means. 34 reference points. So what we're trying to find out is after 20%, if that 5% cut is all we're going to get. Let's go back to SPY now. Let's go here, that 5% cut. Let me just see where we are here. Let's go to, I believe it's this chart. We want to go to this chart on the weekly. I'm trying to get all my boards nice and organized. If you guys are interested in the TradingView tutorial, let me know. I'm finding some pretty cool hacks lately. Anyways, after a 5% dip, which means coming down to the white line, which is currently at 436.7. Where are we? Man, we're pretty close to that 436. Where are we in post? 436.6. We're awfully close to that. On a close, we're right around there too. So if you're wondering why I'm pointing these things out, it's because when robots are doing most of the trading and they look back to history, they're trying to find out, well, what should we do? Well, 8.5 times out of 10, 5% is not enough. It has to go down more, right? 85% of the time, it has to go down more than 5%. So what this looks like to me is very simple here. I'll show you on the chart. It's a dead cat bounce, and there's been no confirmation. So we're down, dead cat bounce. We're rejecting off of the area here, but now we have a weekly inside bar. So to try to tell the story now, we have a weekly inside bar here, which just means that we have consolidation after getting a 5% dip. I don't know which way we're going to go yet. I'm going to have to see that inside bar break bull or break bear for me to confirm which way we're going to go. Jerome could talk tomorrow. If the seasonality chart repeats, I don't think we're going to go up more than like I would be impressed, and that's what the chart would look like right here. I would be impressed if we took out the high and we took out today's high and we close over that 50 MA. That would be impressive by the bulls. We got to close over 445. That's the key area I've been talking about. Yesterday we talked about 438 being a monthly failed breakdown, but then we have to think about 445. I mentioned both of those levels specifically. And where do we go? Man, round trip. 438 to 445 and 445 back to 438. So anyways, we'll go through the charts in a second here. Thank you for bearing with me. The GDP numbers have been incredible lately. So what this has me thinking about as well is like, man, what is Trump going to do? Is he like, uh-oh, I'm starting to see some of those warning signs of like before. Do we get GDP now going back? No. Just the reference to Volcker, if he's really scared, well, 85% of the time, that's it. It's not enough. 5% is not enough. We got to go down more. So is Jerome going to be like, yeah, victory lap, boop, right? 15% chance, I'm not going to be wrong. Or I don't know. So if he takes a victory lap, I think the market could have a lot of euphoria tomorrow. Market is back to neutral for positioning. That's a big deal. And with all this blood, I think there's an opportunity for people to buy into it. Why? Hey, it's relative value. You can get if you were feeling excited about stocks a month ago, well, you can get Apple on a discount for 9%. That's not terrible. You go into the store, hey, Apple's off. Hey, we got a 10% discount on Apple. You interested? I don't know. I don't like that it's cheaper today than it was last week, or like Tesla, down 15%. You know what? I like buying Tesla when it's more expensive. Ironically, that's what people think about the market. Anyways, so there's a couple of lines on here, and let's just make it really simple because that's what I like. I like a simple story. So if this is a trap, what I expect is that this pattern is going to hold, and then that inside bar on the weekly chart is going to break bearish, where we're either going to take out last week's low this week, and that's going to be 433. Jerome comes in bearish. We take out that low. We repeat today's low. We put in another red candle. Then we start the fade, where now we're taking out the August high, and that would turn into resistance once we go down for that next leg. So that's where I would expect there to be some more congestion in here, right? We're going to have a hard time digesting that. And then on the monthly chart, what it means is that we're going to be below the previous monthly low. Because if I look here right now, objectively, I'm trying to just make it really simple. Red line means resistance. Green line means support. So we are over resistance and we're over support, but we're having a short-term correction. So if we look on the monthly chart, it's a really simple story. We have a lower high and we have a lower low, and we're below the previous candle low as of right now. The fact that we got back above, we found resistance where? Right around 445, the real body from the monthly chart. That 50 DMA is acting as really strong resistance. So the monthly chart kind of tells us the same story, where if we stay below 445, this pattern is likely playing out, but it's not all bearish. Let me just go back to my profile one more time, and sorry for bouncing around. If you want to see all these links, they are in my profile. But let me just get to this last one here because it's how we can go to new all-time highs. I'm trying to post more, so if you enjoy it, please make sure to share that. Here's the SPX one where we're just looking to see if this will ultimately lead to new all-time highs. And yesterday we talked about how the 10-year Treasury note going to a 2007 high. Well, I think it really matters whether we're at the first part of 2007 or the later part of 2007, because if we're doing this part right here and we got maybe 1 or 2 months of indigestion, I want to know what stocks make me excited to buy if it's a trap. Short-term trap for the bears. Ultimately, we go to a new high. The positioning goes net long, and then we can have, say, I don't know, 6, 8, maybe 12 months of expansion. And then we have to have our day of reckoning where maybe we go into that recession. Maybe that's when we confirm it. And again, recession takes 6 months to fully confirm. So that would be the cycle. Down, up, maybe down a little bit more, up, and then maybe a bigger down. I'm not sure exactly where the market's going to go. So I'm going to defer to my weekly notes, which I laid out for you, where I'm looking at where the weekly chart's going to close out. Right now, there's nothing that tells us definitively one way or the other. Volume's low. We have upper wicks. That's the warning. We rejected where we would expect to. We're still holding that 5% area, the 5% dip off the high. So 5% down, dip. We dead cat bounced. It was a dead cat bounce and not a gain. On the daily chart here, exact same thing. QQQ is basically the same story. So its August low is a lot lower though. So we've actually made more progress on QQQ than we have on SPY. And because we're not getting the same thing that happened over here, I'm talking about just melt higher, go to a fresh high, and then just expand more. I don't know if we're ready to expand more. This looks exhaustive to me on NVIDIA. It does not look bearish. I'm not saying that. Exhaustion gap. That's what it looks like. Why? Because gap ups are for selling and gap ups are for selling. And that's just that's just the way it works. So for a large part of today, it actually tried to save these previous tops at 482 and then 480. But it just kept fading. So it just filled the gap. It's not bearish yet. Nothing here is bearish yet. It's just the momentum that's shifting right now. So if that was cool, great. Thank you for tuning in. If not, you can now watch the weekend deep dive where I laid out a deeper thesis. If not, thank you so much for tuning in. And again, please consider smashing that thumbs up and subscribing to the channel. Thank you so much ahead of time. I will see you tomorrow for a Friday stream. Thank you.